next question that we got, I think goes right after what you guys were talking about. So when you're talking about playing a breakout or not waiting for confirmation, a huge part of that is having the discipline and knowing when your trade is not working. So one of the followers asked what you guys do for each of your own stop losses. Their specific question actually read that they wanted to know about your stop losses, and also if you had any advice about whether or not when you put in a stop loss, if market makers can see this data and use it against you.
So you should have Bear answer that question.
Okay.
I guess the first part of the question, I am a big mental stop guy. Like I try not to put hard stops because I am a believer that well we all know that your broker can sell data, can sell any data that
like
that
we
they
saw
have
with
on.
Robinhood, right?
Right. So I do feel that like putting a hard stop is can be seen by market makers or by your broker, and because if you put a stop loss there, chances are a dozen other traders are going to have one there as well. So I am a big mental stop loss guy, and I use hotkeys quite exclusively when I'm doing trading. So the ability for me to quickly get out is with my hotkeys instead of using a stop loss. So that's one thing for me. If you're a new trader, I definitely would suggest using stop losses. Just make sure you're giving yourself ample room, because oftentimes if you put your stop loss at a support level, it's going to get tested, and oftentimes just below that that support level will get tested as well. So be well below a support level if you're going to use a stop loss. But I personally like to do an add or two before I pick a stop loss area. So if I have a position that I just entered, I'll most definitely have another area where I'm going to add below that, and possibly two areas below my first entry that I'm willing to add before I stop out on a play. And I think that's important for everybody to make sure that they understand having areas to add. If your first entry, if you get scared if it starts pulling back, you either entered in too large to begin with, or you didn't chart it well enough to get that perfect entry. So having that backup plan is important, I think.
So you bring up a couple good points in your answer that I'd like to touch on a little bit. One is the discipline. Newer traders, can utilize the stop losses to create that discipline of cutting their bags, right? And then at the same time, going into the importance of psychology within trading, which you talked to us about before. Market makers know that, and that's a huge tool that you can use as a trader. Is there's psych levels. Market makers know that your stop loss is at resistance, different things like that. So how long would you say someone needs to go from utilizing the hard stops just below resistance to switching to mental stops? Like, what would you say you can see your discipline improving enough to do so at?
Sure, that's a good question. Actually, I would say it all comes down to each individual is going to be different, and really it's going to be that confidence and courage level. Once you really feel the confidence and courage, you're going to just have to start stepping out and using a mental stop, and if it works, it works. But I think if you do start doing that, you should really have a way to have an emergency panic button, whether it be a hotkey or a flatten button. Many brokers, I think TOS has flatten, don't they, guys?
They do, yep.
Yeah. So just have a backup plan if for all other reasons your trade does go really wrong. Because I've been in plays, and I'm sure everybody here has been caught in an offering before. That's something that sometimes stop losses get skipped. So having that backup plan or a plan to flatten your position immediately if need be is important. So
Can I say,
courage and
just
confidence.
to add off the bear, like stop losses are great, but a lot of problems that new traders come into is that they don't sell. They're like, oh, I want more, I want more. So like have a sell, like, you have a certain limit and just put the sell limit in. That's what I like to do when I was first trading. Because I'd be up like 40% on something, like, oh, it's going to go more. And I was like, oh, I'm only down, like, oh, I'm still up 20%. And then go back to entry. It's like, oh, it's going to go back. And all of a sudden I'm red on the trade, So to me, a sell limit order is super important for new traders because it disciplines you to sell. I always say normalize selling when you're green. And Bearfucker always says, sell when your pants get tight. So,
yeah. That's an excellent point. I'm glad you brought that up because a lot of people they'll be up and they're like, oh, I don't know where to sell. And they're always trying to catch the exact top, which hardly ever happens.
Yeah.
Yeah, you get that so many times in the room as to when should I sell? And we always respond back with trade your plan.
Yeah. Sell half. If you don't know.
So scaling out, right, is another thing that you have to utilize.
Yeah, and scaling out, especially in Pennyland, in a hot Pennyland, right? It's super important, right? There's some trades I've made where I've made more off of the 20% I let ride than the 80% I locked in because the stock just went absolutely nuts, right? And a lot of new people, like, you don't see them like going around saying, hey, look at this trade I got from top to bottom, because they don't. But if you're able to, leave some, let it ride, right? You can make quite a bit of money off of just that. I almost have a rule of thumb where I size in just enough, right, to where I'm happy at 80%, and then I almost every time will leave like 20%. And I know that risking it, I size up accordingly, knowing that this 20% I can potentially carry down to my entry. Albeit our entries are fairly low, especially if you get a stock that went parabolic. But like I always have that mentality, and you have to have that mentality in penny stock land that the stock you're in could go nuts. And that's why I always stress too, it's something I learned from Bear, outside of charting, you got to realize, like, is this like, is the time of day correct, right? Is it not during the middle of lunch? Is it during a time where it could break out, right? Is volume there? How's the competition doing, right? Everything's a competition for volume. So you want to look at other charts, right? And figure out, is this the current best setup, or is there one that's going to try to beat this one for volume? And if it's the current best setup, then you're like, let's ride it. Let's ride it as high as we can, right? But I just think it's super important to always scale out, right? Don't cut it at what you believe to be the top, because like you said, we're either missing the top, which is normally the case, right? We're not selling or we're cutting it too early and then it goes. So if you know that that's a consistency and you've reviewed your trades, then be like, fuck it, let's leave 20% or something.
Yeah, that's a good point too, because it's also going to help you build your confidence for next time. Because otherwise, if you're trying to get out all at once, you're not breaking the habit of second guessing yourself for the next trade. Oh, is this where I sell now? So yeah, you're absolutely right. That's a really great tool that I think a lot of newer traders should try to utilize.
Yeah, Bdawg trades a little bit differently. He goes all in, all out.
Will you tell us a little bit about that?
Yeah, but I'm playing a smaller account. Obviously, well.
And in Canada, no PDT.
Yeah, because I'm trading in Canada, so we don't got PDT, and we've got trade fees still up here. So
and a lot of maple syrup.
Yeah, exactly. But yeah, so when I'm going into a trade, I have to factor in my trade fees, and I don't scale in and I don't scale out, because every time I'm doing that, I have to incur fees. So my trades are usually, I'm going into the trade with my full account, and I'm usually aiming to hit between 5 to 7% a trade. And I've re-entered a few times on a momentum play where, I'll enter, I'll sell, I'll re-enter at a higher price, sell again, and I'll just do that up and just take 10% each time rather than just sitting there and going for that home run trade where, you know, I might get 50%. But, you know, I've been on the other side of it, been up 50%, and all of a sudden I'm down 10% because stop loss rate, right? So you get a knife and all of a sudden all your gains are gone because you didn't lock something in because you're like, oh, I want 60%, I want 70%, but you're not going to get that on every trade.
Yeah, so it's all about finding the balance and trying to manage not being greedy, and then everyone's personal situation. You know, as long as you find a strategy that works for you, and clearly it does. I think you said you trade off of line charts, right?
Yeah, Yahoo line charts and no level twos, no nothing like, nope, and 3 indicators.
Yeah,
9
fuck
EMA,
level 2.
20 EMA.
Fucking line charts, dude.
Fuck level 2.
Literally anything that works, though, that's the whole thing, you know?
Yeah, whatever works for you, whatever gives you confidence to make the trade is
Exactly.
what works for you.
Yeah, it's
Fuck
my
VWAP.
style. It's I've been doing it for years, and it works for
Fuck
me.
VWAP.
Right? So
Yeah, I remember I was interviewing at a really big prop firm in New York City, and one of the things they asked me right off the bat was, "What is your edge?" And they wanted to know, you know, what makes you different or your strategy different, and that can be very, you know, individual to each individual person. But knowing that thing is what's important, and it takes some time to, you know, to go through the ups and downs to find out what works for you. You know, and like we said before, what works for, you know, a breakout trader might not work for another trader who likes to buy into support. So, you know, it's so personal.
Sounds like S&B Capital would ask that question.
It's possible.
Or not possible. They probably all do. That's a good one to ask.
Our next Twitter question actually comes from someone in Denmark who follows you guys.
What
they
up,
want to
Denmark?
know
What's up, Denmark?
Shout
We're
out,
global.
I love Denmark.
You are global. You're very popular in Europe.
All right.
I guess so.
Wow.
And and he wants to know, how should I manage watch lists, and what should these be specified into? Sector, cap size, float, etc. How do you guys catalog different stocks of interest?
Damn. I'll kind of give a quick answer. Just Javicha posts a little watch list every morning. I just look at those.
No, that's true. Like by the time I start trading or log into the Discord into Atlas, the guys have already been trading for 2 or 3 hours, and I just basically come into the room and say, "Hey, what's hot today?" And all the tickers were watching. And
No, yeah. Like
works.
Bear said earlier, it's
The
like
DD by
it's gotta be
Bdawg.
under a certain market cap.
that's all I need to do, basically. So.
Yeah, to add on too. So I think Shark could touch into this too. But for large caps, you kind of could look at them the night before, right? Whereas small caps, who knows what's going to be the gapper? And small caps, you're pretty much only trading the gapper.
So one
not all
thing
the
Shark said, bro, sorry to interrupt, Rhodes, but
go ahead.
one thing that Shark said that really stuck with me was that it was a long time ago. So sorry if I mess up the quote, but
Okay.
he said something along the lines like, you know, we're scalpers, we're momentum traders. You know, we don't do research, we don't do this, we don't do that. We just wake up in the morning and trade volume. And to me, like when he said that, I was like, dude, I want to be a cool kid, you know, like just wake up and, you know, you're just, you know what I mean? So, and it's so true, because like, you know, the longer I'm here and the more I learn from Shark and Bdawg and Bearfucker and Rhodes and Javicha and everyone is, you know, that's exactly what it is. You wake up in the morning, and it's important to know, you know, like reverse split, and because it gives you a bit more range and everything. But the bottom line is like, you look at the fucking volume and you look at the chart, and if it looks good, then you get in, you know.
Well, you want the PR too. Usually, you know, if you don't see PR, you know, I would suggest everyone to be a little suspect, and just to be a little bit more careful, because if it's running up, I'm sure everybody's seen a stock that runs up 50% and then they drop the offering at 230 or something like that. It's just running for no reason. So, always have a checklist for intraday, momentum trading and stuff like that. For me, when I used to do it a lot more, I'm looking at, the trade idea scanner, looking at the top runners, looking at the volume, looking to see who has PR, and then kind of cutting down the watch list from there. But it is definitely hard to formulate, a watch list for the day before, because you don't know what's going to have PR. You can kind of have certain sectors or themes on watch, for example, before the small cap world. Before small caps just slowed down, the big thing was the NTFs. Wiki, WiseKey was going, OCG or OGC or whatever was popping. TCAT was. I think that was running today a bit, right?
Bear's fucking Bambino call. Dude, I remember that day, bro. Like Bear's like, hold on, I'm gonna call Bambino right here. They're like, what? He goes, TCAT to the fucking moon. This bitch ran like 2,000%, bro.
Yeah, 2,000%, bro. Something like
ran over a couple of days as well, too, right?
Yeah, it was nice.
Right, yeah.
But that's
was that the last huge runner we saw that did like 1,000%?
I think so, yeah.
Wow.
Yeah.
And that's why they're next.
Yeah.
They're next.
Dude, I'm calling marketing.
Load them.
I'm calling marketing, bro.
You can take a look at something that's running after hours as well too on news, and it might run a little bit the next day. Also, the runners from the previous day, I kind of take a look at those.
I think going back to the guy's question or the person's question, definitely someone should categorize their watch lists by sector, by market size, by Twitter influencers. I like to categorize my watch list quite a bit. I have watch lists for Zach stocks. I have watch lists for PJ Matlock stocks. I have Atlas stock watch lists that all the people on main floor talk about. I have EV watch lists. I have building material watch lists. Name it. I got a watch list for it, and that really, has been something that I use every day. If I see two NFT stocks going, I'll look at my NFT watch list, go through it. Okay, which one's not moving? Which one's got the lowest float out of the ones that aren't moving? And I'll focus in on that. So definitely having your watch list categorized, by sector, by float. And by influencer is important as well.
I agree with that. And to add to that, I think it's super important. I'm glad you mentioned that. And it's not that important in this market, right? To look at dips in swing trades, because you kind of don't really swing trade in this market, right? You should be higher cash positions than you do have swing trades. But having those watch lists, great cheap prices, are super handy when we have a hot market and SPY dips. You can get highly valuable swings if you're prepared for stuff like that, right? You got to know kind of, right, we're in a green market, there's swings I'm looking at. So as soon as you see SPY, dipping in a green market, that normally sends everything down with it. So when that happens, you want to have those watch lists, pull them up super fast and add the dips on the ones you either aren't in or you want to add to. Another thing too to touch on, to answer the question, Bdawg had mentioned, we're always looking at previous day runners. Typically in any market, when it's either hot or cold, if it's slow during the day, what will happen is people will flock to previous runners, right? The previous day runners. That's a huge consistency we've seen. So that's why Bdawg mentioned that. And I think I learned that from him. But those are ones that are super important to watch. Also, when you have watch lists in Pennyland, right? When I say Pennyland, I mean anything from 20 cents to $20, right? The stuff that we normally trade with momentum. It's super important to have the previous runners on watch, because they might continue higher, right? It just might be a dip in part of the overall run. And people don't know that unless they're watching them. And that's something I've failed to do until recently, is keep an eye on those ones, especially if it's in a hot sector, because that dip could just be a dip with an uptrend continuation, right? A lot of people think just because it topped out that day, it's done for. But when you're in a hot market, you really got to flip that switch and see the value in the higher price targets, because we're playing the same tickers every week sometimes in a hot market. You'll see it on the scanner once and it'll go quiet, but really in that period of quietness, those are the opportunities to get in again, as it could see that upward continuation into the next week.
Yeah, like some of the, like what I look at is some of those runners that from the previous day in the morning, if they're down, I kind of like look at how much volume they're down on. If they're down on minimal volume, I keep an eye on it because it's probably going to have a day two after that.
You've had a couple of good calls on that, Bdawg, where we all think the previous day or like the runner from 2 days ago is done, and then you're kind of saying, "Oh, watch this or watch that, keep an eye on that," and then it ends up going like 20 or 30%. Yeah, you've had a couple of calls on that one.
Yeah.
And then lastly, to touch up on my answer too, is initially when I started to look at charts, I think it's kind of the same. Maybe it's different because Twitter's a heavy presence now. But I used to go to FinViz. I do like some flow parameter, price parameter, and something else. But the problem was it gave me a list of pretty much every ticker, right? It gave me hundreds of tickers, which is great. It's great to flip through those charts, but it's better to do what Bear said, where you categorize them, right, by sector, like Shark said. Because that also helps with timing, right? You can have amazing dips on an entry, like a swing trade entry, right? But you might be in that position having it do nothing, right? And then that's just a waste of your capital, right? Because in hot markets, what do we like to do? We like to deploy full capital, not not all eggs in one basket all the time, but we like to deploy capital. And there's some tickers where we park it, right? Where like SPACs are good parking vehicles where they'll go up, but they're not going to go up parabolically. But
you got to measure your opportunity costs.
Yeah, you want to look for the tickers that have reason to be up, and that's where understanding sector rotations work, right? Like connect them to world events, connect them to like today. Trog mentioned tomorrow's Earth Day, so something to look out for as a potential trade, albeit we're in a slow market, right? So take that in consideration. If you were to overnight, or if you were to swing into this event, that there's proper times to do that, and proper times to sit on your hands. But anyways, connecting it to Earth Day tomorrow, he started to look at renewable energy plays, stuff that might be lit up because that.
I've never heard this before. That's
it helps you time things, right? Because time is money, and that's something both Brady and Bear taught me with swing trades.
Yeah, one thing that I like is just going off of that is, so because I started with like such a small amount, like super tiny, I had to like kind of think ahead, and I would do like 2-3 day swings and overnights and lottos, and so I have like a list of like 700 plus tickers that I just scroll through all day. And when algos start catching, so yesterday, it was all the small caps looked exactly the same, almost like a Nike check. And I mentioned this on voice, and I said, well, dude, algos are back. And I said this yesterday, algos are back because they all look the same. And, now we got today all, great runners, and I say great, but good for the past month. And it's important to note, what major events are coming up, so, and look at which tickers look the same. So if you go through your list and all of a sudden you look at all the EVs and they're all setting up the exact same, and they're all setting up against the resistance ready to break out, that is your next sector. So that's something to keep in mind, that, and everybody here is a great trader, but two have different styles. Like, I try to kind of speculate ahead of the time. Bear fuckers, like comes in, and Bear can like literally like move shorts like up. It's fucking nuts. We saw it with Hoff V the other day. He like, Bear can like single-handedly move tickers.
Yeah, and then in addition to that, like some things Trog and I do, I'm sure Shark and Bear do too. But if we have one thing, this kind of ties into that, like scanning, right? If it's slow intraday, what Trog and I will do is we'll look through that master list of charts. For me, it's not looking at every ticker. What it's looking at is tickers that have the ability to do something, right? So my parameters are like a 400K volume up at least 5% on the day. And we'll flip through that list, which in a hot market, it gives us maybe 100, right? So it's still a narrow list relatively, right? You know, and then in this market we'll have that same list, but there's maybe like 30 on it, which was today 30 was big, and normally we have like fucking like 10 on that scanner this last week. But anyways, we'll flip through that when it's slow, and we'll look at charts that are ready to break out. And if the likelihood of that actually getting like traction is actually high, right? Because you have 400K volume, it's up at least 5%, you know, it has the ability to move if that resistance is close enough, right? So that's when we'll like breakout trade. So that's something we do intraday to scan for tickers if it's slow, in addition to looking at previous day runners.
Thank you so
Interesting.
much for that.
I was wondering, what is the best way to scale in a trade that's going against you? We've all been there, but how do you do it? How do you recommend scaling?
I was asked on Twitter, right?
Yeah,
Oh.
I think so.
So who is that? To Trog?
Yeah, I think we all have different styles.
Yeah, we don't let the trades go against us.
Yeah, you know, you got to follow the trend. You know, like for me, you know, and Bearfucker, I learned it from him actually, is taking an initial position. You know, say it's $100, and then it drops down like 7% or whatever. Then you throw another, and I'm just using 100 just because it's like easy to use. And you throw another $100, and then you're only down 3.5%. But if it drops again another percent, you have to throw 200 in. You know, so now you're at a total of $400 in, and then you might be able to get a reversal. Like Rhodes does it different, right? Rhodes, you do a lot of clicks until it like, kind of, Rhodes likes to do like a round bottom, scale in. I can't speak for Shark or Bdawg, but.
Well, Bdawg said he goes all in, all out.
All in.
So.
Yeah.
And what about you, Shark? Do you go all in, all out, or do you scale?
No. I mean, what I think is important, at least for me, to touch on when it comes to scaling into a trade, if it dips against you, is that for me, I always have a game plan as far as the total amount of capital that I'm willing to risk for each trade. So if it's a trade that I suspect that I might want to or need to add on, I'm not going to take my full position right at first. So that also gives me the kind of comfort level to not totally like zeb out and keep adding into a losing trade until there's no end. And then before you know it, you have, $5,000 or whatever in some trade, and you let emotions get the best of you, and you don't even know how you got this huge position. So for a particular, whether it's a day trade or option trade, it's like, okay, I have an allotted 1,500 that I'm willing to risk for this trade. I'm going to take a 500 or whatever percentage, 25, 30, 40% starter position with the anticipation that I'm going to add, but I'm not going to add if I get over my limit. So that way I'm not stuck with 5K in some losing trade that I just keep on adding to willy-nilly, and then next thing I know, I'm sitting with a really big loss. So that's something that I think that because you hear a lot of the buy the dip mentality on FinTwit, but and if you read in kind of a lot of trading books and stuff like that, they tell you not to add to losers, and I definitely agree and see that point, with the caveat that okay, you don't just add relentlessly, you just don't
It's
add
planned.
till it's planned. Okay, yeah. I'm willing to risk 1,500, I'm willing to risk 1,000. If I'm over that and it breaks below my levels, okay, I'm out, that's fine, but I'm not just going to keep on adding in some kind of a hope that that it's going to come back, because that's not trading.
A newer trader, I do remember the starting days. The problem with that advice, right, to trade a plan, right, create that stop loss, price target, and trade that plan, right, and entry, sorry. But like the problem I had with that is I wasn't, I guess, that advanced when I first started, even for the first few months, where it was more along the lines of, shit, I see this now, there's limited time to create an accurate plan. But as I got more experienced, I started to see trades from a mile away, like 15 minutes before I would want to enter, right? If there's a dip, I'm going to wait for it to get to this spot. But yeah, going more into Shark's comment, it's important to create a plan, and it's super important to be disciplined. It's good to adjust the plan, I think, mid-trade as more data is given, right? As more candles are shown on the chart. But I think, especially for a new trader, it's super important to just adjust that plan. If you start averaging down on a bad trade, it could just get deadly, like he said. And you just need to realize you created a plan. If it's shit, then you got to stop out. You don't want to be like, oh, let's just wait to the next support. You want to get out, realize that it's shit, go review the trade. Don't let that happen again, right? But you can get caught with
sometimes traders will be like,
pretty big
oh,
bags
or if
intraday
they
that.
stop out of the
Sometimes
trade and then it reverses on them and they're like, oh man, I had the right idea. I was right, on the trade. I should have just held a little bit longer. And they think that maybe that was a reason to hold or to add on to the position. But the thing that they don't realize is the trade was wrong. You timed the trade wrong.
Yeah.
So you're still wrong, on the trade, and you were right for selling, even though it reversed. You just have to accept that the timing, of your entry was wrong, and then learn from that.
Yeah, I could back that up. Like that's what Zach Morris told me one time. He was like, "It's all about timing. Like that's all trading is. It's all about fucking timing."
Yeah.
And one thing, going back to that stop loss thing, when I first started trading, I used to use 7% as my stop loss and there's a reason behind it. So if you have $100, right, and you go down 7%, you're now at 93% or $93. Okay. And then your next trade, all you have to make is like 7.25% in order to make $100, and I think it's like 26 cents or some shit. So you only need to make basically just over 7% to make your money back, and you can make a 7% trade. We see them all the time. So 7% to me is a very was my initial kind of stop loss idea, because if you're with $1,000 or if you're trading with $10,000, and you go down to 9,300, you can turn around and take that 9,300 and make 7%, 7.2%, and then you're back even. So to me, 7% is kind of my magic number of when my stop is that's when I get stopped out.
And I know that we were talking about scaling in and using stops. And I think that the next question would be perfect for Bdawg, since he just goes all in, all out. Arya, do you want to read it for us?
Sure. What moving averages do you recommend using for support and resistance for entry and exits?
I've been using the 9 EMA and the 20 EMA as my indicators, and also the VWAP as well too for entries, and just basically kind of telling me if I'm staying in the stock or if I'm getting out. Like if it drops below some of those indicators, then I'm out.
Which moving average would you definitely buy on a decent trend?
I think I'm just buying on the 9.
Okay.
And our last question is for Shark. What is the best place to start learning options?
Best place.
That's a dangerous question.
The best
It wasn't
place.
me who asked it.
I'm not sure. Well, I mean, obviously, YouTube and everything, YouTube, and there's a lot of great resources online for free, to be able to learn, about how the Greeks work and how those affect your option price. But really, I think that the best, the best thing to learn is experience, and whether that's in the simulator. Of course, you don't have the same emotional attachment to your trades, but whether that's, in the simulator or taking very small size in the beginning, to learn how, options move. Obviously the volatility is on weeklies, of course, if you're day trading, is a lot different. I mentioned one time on Twitter, when I'm trading shares now, since I've been trading options so long, when I'm trading shares, it doesn't even feel like I'm really trading, because you can be down 20% on a weekly option, in like a second, and the trade's still okay, technically, but you could be down a lot more, and it could really, mess with your head.
Not the thing of hearts.
Yeah. But the best experience is by doing. I remember the biggest difference between wisdom and knowledge is wisdom is doing, and knowledge is just reading a book about it, basically. So the way you get, the way you bring these theories and the things that you learn into a applied setting is by doing, and that's really the best teacher that you can have. That being said, for anyone that's new getting into options, don't go so far out of the money. I know you see these things on Wall Street Bets, people making incredible gains by getting like these, Tesla's trading at 700 and they get $1,000 calls, weekly options,
It's because they won the lottery ticket, right?
That's just insanity and the road to, despair and disruption. So, don't go too far out of the money as you're learning. That's the biggest thing. You want to have intrinsic value, at least as much as possible, on your trade, on, the options that you're picking. And, if it's a swing trade, give yourself enough time on that data, so you don't get time decay. But I wish there was a really clear-cut answer that I could say, here, read this book, or, something like that. But
I feel like the way you explain it is the way my process was. So I get it. Like I did it through experience too. So
yeah, but go small at first, because it's definitely a different world, and a lot more risk, but a lot more potential reward. But that's the great thing about options too, because you can get one options contract for $150. That's your max risk, and it can, it could double, to 350 to 250 quite easily. So and that kind of goes into a little bit of what Rhodes was saying earlier, two things about scaling out of a trade, which I'm a big advocate of, taking gains along the way, moving up that stop loss along the way, so that the trade, doesn't go, if it goes against you, you're not holding your full position, you're holding 20-30%. That's not that bad if it goes against you. You can always adjust or get out, or also having the mindset that anything can happen, and always having that awareness in the market, because you don't know if that last 10% or 20% is going to go 100%. Okay, in options and shares, 50%, 30%, something like that. You don't know. So always having that open-mindedness is important, because anything could happen. And that's
with options. The money you put in options, you have to, be prepared to say goodbye to it. It should be something that you are literally willing to lose all of it. Hopefully not, but that's just how risky it is. It can go to zero.
Right. Of course, you want to have the risk management. You don't want to let up.
Yeah. But that's interesting. Do you use stop loss for your options? Because that's a little scary.
No, I don't, because the same thing about what Bear was alluding to in offerings. Option stop losses very easily can be blown by, and then you just don't get filled at all, and and it's down quite a bit. So no, I use the mental stop losses. However, just like Bear was saying, it takes a certain level of discipline to work into that, because if you don't have that discipline to be able to get out if a trade isn't working for you, you're going to be in a world of pain. So I don't personally, because options are volatile, and they can really move on you, and I don't want to get wicked out. But it takes time to build up that discipline, and don't push yourself. I think a lot of traders put too much pressure on themselves to be amazing superstars when they see profits on FinTwit. But
base hits are going to get you way further in the long run than going for home runs every swing.
Yeah,
Right.
you're gonna pull out his rotator cuff.
But
I think
sometimes you
that
gotta
what
rock up and fucking pull a Bambino out.
You do. You gotta
Yeah,
pull
you know what I
that
mean?
Bambino out once in a while.
I mean, I think that overall the theme to all your guys' answers and advice, so much we hear about how much is learned through experience and watching and just trying, trial and error, and always trying to better yourself. And I want to thank you guys so much for answering all of the questions. And I would really like to end our time together by asking you guys to each give one thing that you would like to say to new traders, or maybe it could be something that you, if you could go back in time, you would give the advice to yourself. Because there's just some things we can only learn from experience. And since you guys have been there and done that, if you could just share a little bit of your wisdom with us, we'll go around to each person. Let's start with Bdawg.
Yeah, I'm just gonna say that, always have a plan when you go into a trade and trade that.
Go all in. Go
Yeah.
all in.
Do what works for you, right? All in works for me, so that's my trade plan.
This is not trading advice.
Following the plan is so much harder than making the plan, but some don't even have the.
Oh yeah, exactly.
Yeah.
But yeah, building that discipline to follow that plan as well too. So.
And Rodessa, what would you like to say to newer traders?
I think I would like to say, as stupid as this might sound, make sure you're always having fun with it, right? Because at the end of the day, this is our, either the job or the desired job for many people. If you overcomplicate it, you think about the money too much, what's the point, right? Go to school and do something if you do that, then it's just a 9-to-5, right? It's no better than your current 9-to-5.
9 to 5 in hell, because
Yeah.
if you're on the other side of having fun in this,
the professional trader is glorified, but it's can be a lot of ups and downs.
Yeah,
definitely. And just make sure you're having fun and red days, green days, and try not to let the emotions get to you on both sides of the table. Right? Don't get confident, don't get over sad.
I like that. I like that advice. What about you, Trogdor? What would you say to newer traders?
Can I go last?
Yeah, we can come back to you. Let's see. Let's see. Bear, can you give us your wisdom?
Sure. I guess in the words of our great leader, Zach Morris, don't be a bitch, excuse my French, but I mean, really, it's, that courage, confidence, and execution are the three biggest things that are going to be your enemies. So, I mean, once you can get over that, that's the hurdle is the emotional hurdle. Don't be a bitch.
I like it. And what about you, Shark? What is your wisdom for traders with your wine bottle?
Good question.
Do I need to come back to you too?
Who do we have? Do we have anyone else on the line?
Just Trogdor.
No, sorry. Yeah, exactly. So, no. It's funny because I came from the scalping background where I used to always preach the 3-minute, but I'm going to have to say, new traders, stop using the 1 and the 3-minute. Even 5-minute is like bullshit for me, in my opinion, at least.
At least the 1 minute.
Yeah.
For sure.
Oh no, but Bdawg loves the 1 minute line chart.
Yeah. Of course, like I said, there's 10 ways to scan a cap, but one of the biggest things that changed for me around year 2 was getting off the smaller time frames and getting a better look at, even as Rhodes said, as far as the charts that the previous day runners. A lot of intraday traders have hindsight, and they don't look at multiple time frames. You're not looking at the daily, you're not looking at the 20-day 4-hour, seeing if the trend is still up, if this is just a pullback and lower volume, stuff like that, or even intraday. Now for me, I don't even really trade on the 5-minute anymore. 10, 15, 30 hour, that's how I'm trading. So that's just one of many things, but I know a lot of traders, they'll like, wow, oh man, I was in this trade and I got shook out. Well, that's because you were getting too much data from the 1 or the 3-minute, and you're getting shaken out with all these false signals. Just ride it on a longer time frame. So
Good
that's
advice.
it.
And
cheers.
Trogdor, are you ready to give us your answer?
Yeah. I don't know. My big thing is just come up with your own fucking ideas. Like, like you can't just be sitting there and like be expecting to follow these fucking calls that everybody's making. Because they've seen something, they saw something set up like a day, 2 days ago. So just get creative. Come up with your own ideas. I live by, and it's like an acronym that everybody can look that one up later. But these stocks, it's like hit it and quit it thing. It's like, don't fall in love, because the day you fall in love, you blow up your whole account. I fell in love one time with ONTX, and my whole account blew up, and I basically started from zero again. But just come up with your own ideas, and once you see, like, to me anyways, once you see other people talking about it and it starts trending, I'm like, all right, I'm fucking out. Like, you know what I mean? So.
Mm-hmm. Yeah, the stocks don't love you back, but you know who does love you back?
This podcast.
You're us.
Wow.
And the Atlas crew.
Damn.
But before you go on to that, I just want to say as to what Roger was saying, go with your own ideas and stuff like that. That's how the 9120 was created, on just my dumb idea of it. And it's carried on to today. Do your own thing and come up with outside of the box thinking, and notice patterns and what works for you, right? So
being curious always.
Yeah, and the only way to do that too is by looking for, doing it on yourself, like all of them just mentioned. And what that leads to is the ability to find consistencies. I'm a huge advocate on, if you can't replicate that trade again, was that trade actually a good trade, even though it might have been green, right? We want to trade consistencies. We want to trade something that we could create a pattern or a strategy based off of. But yeah,
do a
super
face review for everyone.
I thought we were gonna get the gift.
That's
guys.
not your face.
You don't want the gift. You don't want it.
Yeah.
No, this
Thank
is
you
great.
guys
Thank you so much for having us.
Yeah.
Thank you for having us.
For having us.
So much fun.
Yeah, y'all are cool, man. Let's do it again.
I will say,
What?
This has been the most fun. We had a blast. Seriously, it was a lot of fun. Thank you guys so much. And
Yeah,
I learned a ton, and I think a lot of people out there really needed this information. And
yeah, no, that's what I'm saying. Like, I love these guys. And when I went in there, like, they gave me the exact same amount of shit as they do everyone else. And they're like, if you're going to say something, make sure you're saying it with conviction. Yeah. I think it was Rodessa who told me to say it. Say it with conviction.
Yeah.
If you're wrong, they will go and correct you, which is amazing. And it just was always like this family, like, team sort of vibe. And I think it's amazing. And I am so glad that we were able to get everyone on, and we didn't like break the episode or anything. We actually got through it.
Yeah. Subscribe to Trader Babes.
Yeah, subscribe to Trader Babes. Yeah, for sure.
I trust you are all subscribed.
Subscribe to Rodessa Twitch.
Benzinga
from Bad.
Yeah.
Great ideas from
Bad. Hit up our Twitters.
Flash all our marketing schemes right now.
Yeah, check out my OnlyFans, my OnlyFins. I call it.
Yo, and shout out to Atlas, and PJ Matlock for starting it up and bringing us together and everything. He's done a really good job. And shout out all of the Momo team. Everybody on the Momo team, like everybody's got different parts moving. So it's really fucking cool to see everybody, really loving each other. So.
Yeah, there's so many names to mention. We're just a small part of what it's become. So yeah, props to everybody who's helped out and taken the reins. It's really incredible how to see from me and Bdawg's perspective, some little thing that we had to fight to start from the beginning to grow into such an awesome thing with such a supportive community inside of another awesome supportive community. So it's just so cool.
Yeah.
And awesome.
Yeah, well done, guys. And you guys helped so many people.
Nice. AtlasTrading.net, right?
It's
Is it open?
Is it atlastrading.net or is it atlas-trading?
Trading.net.
Yeah.
And thank you, PJ, for giving us Scalp Team, going into Momentum Team.
Yeah, it's been great. It's been great. Thank you.
Well, I hope everyone liked it. Thank you for having us.
Hey, just last question? Who's the most babe out of Bdawg, Shark, and Bear?
Are you asking for our opinions, or are we
Yeah,
gonna do
who's
like
most
a
babe?
vote?
Who's most babe? Yeah, everybody else thought.
We're all honorary babes. I think we're all equal.
Who
Yeah,
is
oh yeah,
it?
no,
Who's number one
100% you're all
babe?
honorary babes
I can't
now.
believe Rodessa can even.
But you gotta pin us against each other.
Yeah, and we can't even see you
Sorry,
guys,
take
so
the
we don't
hat off.
know.
My vote's
Come on,
for
face reveal.
Look at that silver fox. Look at him.
Bdawg.
Yeah. If you keep scalping, that's what gives you the silver fox.
That's right.
The more you day trade, the more gray hairs I find popping up.
About it.
All right, guys, go get some
All right.
rest. Have an amazing day tomorrow and
Yep.
an amazing week, and we will talk again soon.
All right, let's
Okay,
make some money.
Want more Trader Babes? Subscribe now and connect with us on social media for exclusive content and access you won't find anywhere else. And we'll see you right here on the next unforgettable episode of Trader Babes.